WBRN Radio and on the Bostonred Network. This is the Numbers Man section. The episode is This Week in Economics, and we are on the 24th of February 2020. Try to bring you up to date on the latest, flashpoint to a possible downturn in the global economy. We have the COVID-19 virus. Let me just spell that out. COVID and a dash 19 is its proper name. Now, the number of cases, you'll hear a number of things on that, but here at Cranston Analytics, we are, at least at this point, projecting the number to rise to close to 100,000 at this point in time. Roughly now 80,000 plus infections, and that is, according to this report here, at least 78 or so thousand of those are in on the mainland of China. But it has spread to other places, and we'll go over some of those. I'm using the an AP report here, but the number of people dead, and this number is changing, is 2,500. It is more like now in the 2,600 plus. Now, how does this affect the global economy, and in particular the U.S. economy? Part of it is the psychology of the market, and let's go over a little bit of this. And we don't have a typical typology of how all of this is happening. In Japan, of course, they had the cases from the Diamond Princess cruise ship. Roughly 20% of 3,711 passengers and crew were affected. There were this ship was massive, about 1,000 crew members there. And in the Republic of Korea, the count is going up. Somewhere we have a latest count there, close to at least, look at it here, 327, I believe. Here, these numbers are constantly changing in Korea, and this is near a city of 2.5 million Daji infections as, and they've had deaths also in that area. This is in the Republic of Korea alone, and those numbers are going up, and it has spread to other localities. In fact, the U.S. command in Korea has canceled maneuvers with the Korean forces there. So this is one of the situations going on. And from the health department here, they're testing people flu-like symptoms. About 28,000 people, health workers, are screening more than 9,000 that are followers of some religious organization around there. And so it goes on. And these numbers are only going up. They're shutting schools, canceling events, asking companies to scatter working hours, and so forth. That is in South Korea. In addition to South Korea, in Italy, there are cases there. The outbreak that is around Milan. In fact, they had to cancel the Fat Tuesday, or the carnival, parts of carnival there. In Iran, there, at least at this particular dispatch, 43 cases there, and let's see, United Arab Emirates. I mean, the number just goes up here, and this is in the Lombardy district of this northern Italy is where it is there. So the cases are going up, and this was of Sunday, 100 and 57 cases. You can sort of figure out what is going on here. And these cases and numbers are not static, they're dynamic, period. So we'll continue to monitor those events. In the U.S., the Fed has been looking at it, and the problem in the U.S. is what they call the inverted curve. That is when short-term rates are more than long-term, in other words, the 10-year treasuries. So the Fed is looking at that. They're trying to get some type of plan. The administration is asking for additional monies. When we started this, a bill that they can work on that particular situation. So we are starting now to see in the U.S. Some of the outflow, and the medical authorities are now talking about precautionary things that they need to do for people need to prepare for a long drive. And this is one of the big items here that is happening more and more in the states here, trying to get people prepared. Such things as masks. They want to advising citizens to have certain kinds of things. You've seen probably in various places this type of gel that you use to wash the hands with, cleanse the hands or whatever. I know being around medical offices, I've seen it, and they also the mask. Now there is a dealer in Texas. I heard this. I think his name is Patton, but anyway, you can just do a search and find his place. He makes some very dependable masks, but he ran out, so I'm assuming he's making them 24/7. A lot of his orders are going to China. So this is one of the big items here. I'm just looking at the BBC spending a little time on this, and the fear, of course, is a pandemic. They're showing a Republic of Korea city of Daegu, Daegu. Anyway, just showing it, and COVID-19 there, and how many people have died from it. And it is evidently is in Afghanistan, Kuwait, Bahrain, and supposedly these are people coming from Iran. But the problem there is that they don't have a lot of patent answers as to what is going on here, period. So WHO, that is WHO, they're not calling it a pandemic. Evidently the working definition of a pandemic is if this is on more than one continent. Well, it is on more than one continent this time, as it moves somewhat through Europe. Now, I don't have any numbers here as far as the UK, Germany, and some of those, but Italy was on the verge of a recession when all of this started, so they are going more and more into a recession in Italy. And this is where it affects the global economy. Italy, Germany, nothing to do with COVID-19, but just general conditions there, period. So those are some of the things that that we're seeing now in the Republic of Korea. 7,700 troops have been quarantined after 11 military members were infected. So this is the reason that they have suspended work the U.S. With the Korean Defense Forces. So we're starting to see somewhat of a picture there. And on Monday, let's see, 409 new infections. This is a number we don't focus that much on because it is a number that is continuously going up. So we'll continue to look to that, and my thinking is to cover this from a global standpoint. Now, the virus has hit firms in China. Chinese firms on a credit crunch here, and the Chinese government is giving some low-interest loans, etc., to a business pumping billions into the economy. And car sales have fallen in China 92%. Small and medium size. This is from the BBC. In China, particularly focused because they account for 60% of the economy in China, 80% of the jobs. That's according to the People's Bank of China. And all of this came around the Lunar New Year, so they've been on an extended type of vacation there, and into, of course, mid-February, and they are now looking at sometime in late March, perhaps early April, of starting things back. The International Monetary Fund here, and 20 economies known as the G20 echoed basically the same thing. China being the number 2 economy, of course Japan being number 3, and then where Korea plays into this. So it becomes much more of a serious task coming. So we start looking at it. Let's look at the price of petroleum products, and it has been dropping. We'll have some figures here, but again, this is from Reuters. The price has dropped 4% on demand concerns there, and dispatch was out of London, and Brent crude being down 4.1%, roughly at $56.13. Had not checked, we'll give you the numbers there, but they are moving down basically, and it's a recap of things. This is from Stephen Enders. He's a chief market strategist at Axion Corp. We should not underestimate the economic disruption, as a super spreader could trigger a massive drop in business activity around the globe of proportions the world has never dealt with before. And it could indeed, because of supply chain, also because of psychology there. Goldman Sachs said commodity prices could fall sharply before the Chinese stimulus takes effect later in the year to help the sector achieve its 12-month return forecast of about 10%. The promise of stimulus has made the commodity markets act like the equity markets, building up risk of sharp correction, the bank said. It's a note there. So you can kind of see what is going on. Let's get some rig counts here. For the third straight week, drillers added 1 rig last week, bringing the total, this is in the U.S., to 679, the highest since the week of December 20th. This is from Baker Hughes organization. We usually give Baker Hughes. However, Bank of America's Global Research kept its 2020 forecast for the price of Brent crude at $62 a barrel, citing, of course, voluntary and involuntary declines in OPEC. OPEC has been doing this. In fact, one of the stratagem is to just simply house the petroleum in tankers offshore. So these are some of the things they've been looking at to keep the price of petrol up, but none of this is a substitute if the demand further drops. And of course, in China, private automobiles are not being used. Public transport period. From Warren Buffett, the Oracle of Omaha, basically said on CNBC, he has no special expertise, well, obviously that, but that investors with 10 to 20 year time horizon forecasts on companies' earnings power will find they have made a good investment by investing in stocks. He's talking about equities here. You can certainly you certainly can't predict the market by reading the daily newspaper, no doubt about this. But this does contribute to the psychology of the market, particularly in countries like the U.S. If you look at the present situation, you get more for your money in stocks and bonds. Well, again, and this is his making there. He says many of the roughly 1,000 Dairy Queens in China are closed, while those are open aren't doing any business to speak of. Well, no doubt about that. While companies like Johns Manville and Shaw Carpeting are seeing supply disruptions. These are some on the Berkshire Hathaway situation. The Oracle, incidentally, upped his percentage. I believe he said, 4 or 5%. I look at my notes here. In Apple, and he finally at 89 switched to an Apple phone from his flip phone. I guess supposedly he had an analog phone. Oh, last time I saw him, but that was quite a while back. He did have the analog phone. I assumed he had upgraded. But anyway, when you're 89 years old, that is where this is the year-end results, and we'll get this on our next broadcast. And Berkshire Hathaway will just give you. He said operating profits fell 3% to $23.97 billion, hurt by a decline in insurance underwriting business. Net incomes total a record $81.42 billion, added by unrealized gains in stock investments such as Apple. He has a Berkshire Hathaway in things like IBM. He's less than that, and Wells, the bank, less than that. He should have less than a long time ago, but the insurance underwriting thing, we don't have it, but we'll get it and see exactly where we are there. And let me roll along here a little bit more. And we'll start to bring up some of the analytics here. And I think before we go to ISH Market and their research of their various indexes here, new orders by private firms also declined. I guess we'll do this. This is ISH Market via the BBC. Drop came a notable worsening in the service sector, which includes financial and retail. This is from them. New orders by private sector firms also declined for the first time since 2009. U.S. Financial markets fell sharply following the report. Incidentally, they fell the U.S. market fell 1,000 points, 1,003 on Monday. So we're seeing those activities fall. The latest Purchasing Managed Index found that service business activity fell to 49.4 from 53.4 in January, while manufacturing output slowed to 50 compared to 51.9 in January, a 6-month low. The combined score was 49.6, down from 53.3 in the opening month of 2020. That would be January. Anything below 50, a contraction. So these are some of the things that are happening here and can add to it. We'll get to some of those PMIs in a minute here. I thought we would just brush upon this. This is in February for the first time since 2000. This is service activity here. Recent weeks, companies around the world now, we talk about Apple, and various other companies here. And the Federal Reserve has a basket of things. There is some talk of the Federal Reserve lowering interest rates. The problem there is that's one of the things the Federal Reserve has in its toolkit. But if you lower interest rates to, we'll say, 25 basis points below that, you get into negative interest rates, then you have nothing left in your toolkit. Period. You then have to go to QE or quantitative easing and hope that things will work out for you. Let's go to some of the PMIs here. We have a number of those, and in no particular order, just what comes flying up first across my screen here. We'll do the U.S. We do have, I believe, the Eurozone also here, where we can look at these. We have Germany. You get a little bit of the picture here where we are. And then we have, this is Eurozone, well, the U.S. probably, no doubt. Yeah, this is a flash composite PMI there. And basically some of the information we just gave you The index at 49.6. It was. This is for February. For the first time since October of 2013, the flash U.S. Business Activity Index at 49.4. This is a 76-month low. The flash U.S. PMI at 50.8. It was 51.9 in January. And the flash output index at 50.6. It was 52.4 in January. Here we go. Private sector firms across the U.S. signaled a slight decline in business activity in February. The overall contraction was driven by notable worsening of the service sector performance, where output fell for the first time in 4 years. Adjusted for seasonal factors, the market flash composite outlook index posted at 49.6 in February, down from 53.3 in the opening of the year. Although only a fraction of the decline in business activity brought to an end of a near 4-year sequel of expansion following a contraction in the service sector there. So this is turnaround from a solid output expansion seems in the opening month of the year. Opening months of the year can be very, very tricky, because you the opening of Q1, you're coming out of Q4 of the previous year. The contraction in output was partially driven by a renewed decrease in new business activity across the service sector. Although a fraction overall, the rate of decline was the strongest in the series history. That's since 2009 October. Now you remember that was a depression. The new export orders fell as firms reported greater hesitancy, and this is what the Fed worries about also amongst clients to place orders. And this is why you have the inversion curve there. Long term doesn't look as rosy. Pressure on capacity was reduced in February as the level of outstanding business fell. As a result, service firms increased their workforce numbers at a softer rate. No doubt. That said, business confidence reached its strongest since last June, and always internal contradictions here. At the same time, input prices rose at the lowest pace in the current 5-month sequel of inflation, and was only slightly overall in an effort to remain competitive. Firms raised their output charges only fractionally. Goods producers noted only a slight improvement in operating conditions in February, as signaled by fall in the flash U.S. This is manufacturing PMI. The slowest headline index, reading was partially driven by softer expansion in production and new orders. Upturn in output was the softest since July, with firms stating that weak demand conditions, etc., and delays in delivery back again where COVID-19 has dented production growth. So it is entering the cycle, although without output expectations improving. Reached a 10-month high. Business confidence remains relatively muted, as firms suggest uncertainty surrounding the impact of COVID-19 has weighed on an optimism there. And should in fact weigh on that. And new orders received by private sectors fell for the first time since that was October of 2009. Private sector companies continue to struggle to attract foreign client demand as new export orders fell for the second month running. Employment continues to increase midway through the first quarter by at a slower pace. We're starting to see that. We should get to we will get to consumer confidence out this week, and we'll have it on the next show. Inflationary pressure softened in February. There was some inflation there. The seasonally adjusted flash U.S. services PMI index registered at 49.4, down from 53.4 there. So this is comments from Dr. Williamson, the chief business economist. With the exception of the U.S. government shutdown, that was in 2013, U.S. business activity contracted for the first time since the global financial crisis in February. Weakness was primarily seen in the service sector, where the first drop in activity for 4 years was reported, but manufacturing and production also grounded to almost a halt. That was expected. Manufacturing has been in a recession for a very, very long time. Total new orders fell for the first time in over a decade. 10 years deterioration was in part linked to, again, COVID-19. Companies also reported increased caution in respect to spending due to worries about the wider economic slowdown. The survey data are consistent with GDP growth slowing from just about 2% in January to a crawl of 0.6% in February. However, February survey also saw a notable upturn in business sentiment about the year ahead, reflecting widespread optimism that the current slowdown will prove short-lived. That in itself is a very interesting situation. Let's back up a little bit here and go to the Europe or Eurozone PMI composite index at 51.6. It was 51.3 in January, 6-month high. A little different than the service PMI at 52.8. It was 52.5. The flash manufacturing at 48.4 is risen some. So the Eurozone a little different there. Eurozone grew at its fastest rate in 6 months during February. Now, we had, I think, previously talked about this situation occurring. That 51.6 growth was centered on the service sector, where businesses grew at joint fastest rate seen over the past 6 months. Overall rate of expansion remains only modest. New orders have risen at a rate equal to January's 7-month high. Inflows of new business into the service sector grew at a fractionally weaker rate than seen in the past 2 months. So some things are seen in Europe. Notable development constraining manufacturing in February was a marked lengthening of supply and delivery, with delays from input, the most widespread since December of 2018, attributed to, again, the COVID-19 outbreak. So it's drifting in here a little bit into Europe. And the comments again from Dr. Williamson. The Eurozone economy managed to pick up some momentum again in February, despite many companies having been disrupted in various ways by COVID-19, which caused supply problems. The flash PMI has climbed to a 6-month high, consistent with GNP growing at a quarterly rate of 0.2%. Expansion is being led by welcome resilience in the service sector, but manufacturers also showing encouraging signs of pulling out of a downturn. This is kind of an interesting situation. However, the outlook remains highly uncertain, notably in respect to the potential for further disruption. Again, is supply chain COVID-19, while February surveys are welcome news in a month where media headlines have been dominated. This is psychology of the market, fears of economic activity being hit by COVID-19. So we see it playing more and more into things. This is the German economy. Won't spend a lot of time on it, but nonetheless, the output was at 51.1. It was 51.2 temps in January. The service index at 53.3. It was 54.2, a 2-month low here in January. The manufacturing was at 47.8. This is Germany. It was 45.3. This is a 13-month high. The manufacturing output index at 47. It was at 45 in January. So it indicates a modest expansion in the German private sector. Notably, the manufacturing sector moved closer to stabilization, with the survey data indicating slower falls in out. And this is from Phil Smith. He's at ISH Market. The February's flash PMI results show that the German economy managed to eke out another marginal increase in business activity despite fresh setbacks to exports in the wake of COVID-19. Reports from surveyed businesses indicate so far that disruption to manufacturing production from supply issues had been fairly limited. We'll have to check back here. The manufacturing of PMI defied expectations in February to move to its highest in 13 months. Unusual again, COVID-19 plays into it. And finally we go to, where are we going here? The Commonwealth Bank of Australia. Flash PMI signal a renewed fall in business activity in February in both manufacturing and service economy. Though modest, the rate of reduction was the steepest since the data's collection began in 2016. Again, the COVID-19 virus there would affect China more, Australia. The headline figure derived from the survey is the Commonwealth Bank of Australia's Flash Composite Output Index, which is designed to provide timely indicators there. A reading above, anyway. So you had a decline from expansion in February at 48.4, in January at 50.6. You can see where this goes, and again, this is a comment from the market people. A flash PMI implies a contraction in the private demand, whence this is clearly a disappointing result. It is not altogether surprising given the two extraneous shocks that hit the Australian economy, the brush fires there, and of course COVID-19. Our main concern is these events have hit the global and local economies at a time when domestic demand was already soft. So we're looking at Australia as being already soft. The brush fires, billions of Australian dollars there that caused the problem. So we're looking at those. Unfortunately, this is a Chinese version. So let's go here to one of our other reports. This is from the U.S. here as we wind down. Now this is monthly new resident construction. This is January. It was issued on the 19th of February. For January, basically speaking, building permits at 1,551,000. Housing starts at 1,567,000. Housing complete at 1,280,000. And this is basically what we have here. Privately owned housing units, authorized building permits were the seasonally adjusted annual rate there. This is 9.2% above the revised December rate of 1,420,000. Single family authorization in January were at a rate of 987,000. This is 6.4% there, and because it is revised, there's some revisions there. Anyway, housing starts were seasonally adjusted at 3.6% below the revised December at 1,626,000, but is 21.4% above the January of 2019. That was a very challenging winter. We had those sub-zero degrees, Arctic blasts, etc. in January and early February. Anyway, housing completions were seasonally adjusted at 1,208,000 there, with 3.3% below the revised December, and but is 1.5% above 219. This is from the U.S. Census Bureau that they put this information out here. So we do have a few things going on around here And let me just check how we had. I was thinking we had COVID-19. I was thinking we had some more production figures here, and evidently, I guess we do not. Let me just check one other thing here. Last episode we highlighted Chairman Powell's testimony before the House committee there. Basically, it there where he talked about COVID-19 some, but again, this is on their jobs report. There was a little rise in inflation, but once again, inflation itself with COVID-19 coming in will not be a big problem. There's no doubt about that. Let's go back here to the BBC and we'll do the numbers. Let's take a break here. WBRN Radio. Okay, this is the 24th for what we have here. The FTSE was down 28.11. The FTSE 100 in Amsterdam, they were also down 23.35. In France, they were down 209.69. The DAC was down 478.98. The Eurostas was down 131.85, and in Madrid they were down 41.10, and in Bombay they were down 806.92. In Hong Kong for 87.93. The Nikkei was down 92.41. This will fluctuate some. We gave the Dow earlier there, so we won't go back to it. We had better numbers on it. And for Brent crude, that was at $56.08. That West Texas at $51.26. And gold, of course, increased here. We'll get to Forex added $24.30 at $1,643.30. So that is gold here. And let's see what we have. I don't think we have the S&P here on. This was the BBC's. No, in fact, it fell actually much, much more than that. We don't have that latest number, but however, what is happening here, our numbers are pretty much in line with what is going on. They are constantly in Europe reacting to the COVID-19 virus, and as it expands, particularly in Italy, you'll see more of this coming in. And we're looking in the U.S. There have been some machinations there. People from the cruise ship that were brought into California. Now, they are not sick at this point in time. So thus, there was a court case over where they would move them to. Now, this creates some what we label hysteria when you start arguing about that. They were going to move some people to Alabama, I think the same group of people. But they decided that they would not move them to Alabama. So again, that is a situation there that continues on. And of course, in Italy, it's one of the larger trading partners of the U.S. So we can see more calamities there. And if need be, we'll have a special report sometime between this and our next report. Nonetheless, for those in business, obviously you want to make the rest of the week as productive as possible. And of course, as consumer, the eye on the prize, particularly with electronics and that sorts of things. We'll start to probably see some shortages. The iPhone is being hit. They do have, some product in the line there, so you won't see much of that, but you will see other things going on. And on the political situation, there has not been much talk. COVID-19 covered up the debate. They are now in South Carolina. You can check out our coverage here on the political side of the WBRN Radio Boston Red. We've been following it, and we will continue to follow it, period.